Let's take stock of Godrej Consumer Products earnings. I have with me today Sameer Shah, the CFO at Godrej Consumer, joining in on the show. Sameer, hi, good morning. Good to have you on the show. Just going through, the concerns around the inflationary trends first in raw materials. Help me understand, when it comes to the second quarter, what is the extent of price increase that you took? How much more is in the offing?
Good morning and thanks for having me on the show. I think if you look at our Q2 performance in India, at overall level, we have had a 10% sales growth. If you decipher the sales growth into UVG, which is volumes growth, and UPG, which is price growth, it's half
Recording in progress.
5% growth in terms of volumes, and we have had another 5% growth driven by the pricing.
Okay, fair point. Just wanted to understand the outlook. Do you sense that raw material cost pressure is here to stay? And in lieu of that, how is it that you're going to cope with the price hikes that you're going to undertake? And would you say that the price uptick is going to continue on an upward trajectory to try and mitigate the impact of raw materials?
Yeah, it looks like to be the case. The inflationary trends, will continue at least in medium term. Even if you look at the basket internally, it's largely palm and caustic and chemicals basket, and also crude-linked derivatives. And we have seen sequentially also increase in input inflation. What we have done is we have taken incremental sequential price increases. They will be in market effective December to Jan. That will help mitigating some of the increase in input inflation and should also comfort the overall operating margin. So in very short term, we do expect this inflationary pressures to kind of result in margins pressure, but maybe a couple of months down the line, once the price increases fully in the market, we should see them easing off.
Sameer, as I go through your performance, I can tell that you've seen a very strong double-digit growth when it comes to air fresheners, the personal wash and hygiene segment. But are you back to the pre-COVID levels? What visibility do you have here?
Yeah, so if you look at the basket of discretionary categories within our portfolio, categories like hair colors have been back to pre-COVID levels. We have seen strong growth, strong 2-year CAGRs also. Air fresheners and fabric care are the two categories which are still gradually recovering. Fabric care maybe a quarter or so more, and even air fresheners we sense within the next couple of quarters should be back to pre-COVID level. They have been gradually recovering, but still not yet at pre-COVID level.
So what can you tell us about the demand on ground and whether or not it can absorb the price hikes that you're going to throw at them?
I would say the demand trends are steady at this point in time. We continue to see higher growth in rural as compared to urban. In fact, even for last quarter, we saw our rural growth 3-4 percentage points ahead of urban growth. We are also relatively under-indexed in rural, so we do sense that rural demand for us at least should continue in medium term. I don't think so pricing will have any impact on consumption because these are low-ticket purchases. If you look at categories like personal wash as well as hair colors, we are looking at 10 rupee, 20 rupee price point. So taking a 5-7% price increase, that too in a calibrated way, should not impact consumption. That's what we have seen in the past also, and we expect same to get played out this time around also.
But what is it that you're doing at your end, Sameer, to try and cope up with fierce competition? Because as we understand, Dabur as well has now entered into the HI segment.
We always welcome competition. If you look at our portfolio and some of the categories in India, we compete with some of the large players and still continue to, sort of gain share generally in most of the categories in which we play in. In fact, in India, I would say in last 3 months, 96% of our portfolio has gained market share. So that's a great place to be in. We have very strong brand equity, so we don't expect any challenges in terms of any competition coming in. One of our growth driver also has been innovation. So we continue to kind of innovate and have very disruptive launches in the market, which differentiates us vis-a-vis competition and also creates a very strong consumer pool. And we'll stick to those strategies.
Given that rural growth seems to be moderating, Sameer, what outlook can you give us about how the second half of the financial year is going to pan out in terms of, your margin trajectory and, of course, volume growth?
So at this point in time, our ambition as well as building blocks which we are working upon gives us the confidence that we should be close to a double-digit value growth in rest of the year. It will be driven both by pricing as well as by volumes. Margins on the whole could see a small, dip, especially in very short term, because the price increases which we have taken will be effective more so from late December to Jan. On the whole, on a full year basis, my sense is there could be a small, dip in margins, and we would be more or less in the double-digit growth zone, which is not a bad place to be in, especially in high inflationary environment, to clock on a full year basis a double-digit growth. Also, 2-year CAGR of double-digit and a small decline in margins.
Fair point. And given the unprecedented inflation, raw material cost pressures, does that in any way delay your new launch pipeline?
No, we will continue to kind of innovate as well as have disruptive launches in the market. We will also continue with our brand building investments because they are very important from a long-term growth perspective. So we are not going to compromise on those. We'll continue to work more on cost-saving programs. We'll also try to leverage scale and also leverage our global portfolio, because our global portfolio is relatively less impacted by commodity inflation as compared to India portfolio. So we will leverage our overall portfolio. All of that should result in offsetting some of these input inflation challenges, giving us a pity to kind of invest for growth and also ensure that margins are in a tight band on a YY basis.
So Sameer, lastly, give me some color on what the new product pipeline is looking like. What categories would you be focusing in on?
It's going to be broad-based actually, and we will see disruption, across a lot of categories. What I can share with you is some of the recent past launches have been doing very well, whether it be the Goodnight Jumbo Fast Card, which is a revolutionary paper-based mosquito repellent, which burns for 30 minutes and gives relief for 4 hours. One of the recent launches which we had was Goodnight Gold Flash Liquid Vaporizer, which is also doing quite well. Some of the home cleaning range through brand Proclean has also done very well in recent past. The hygiene portfolio continues to scale up very well for us. So we will continue to see a lot of launches even in future, medium to long term from our end.
Okay, Sameer, great having you on the show, and good luck for the future quarters ahead.